What on earth is going on in the real estate market and interest rates? We're going to talk about that next. Hey there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates, and we're going to start with an update on those interest rates. 3 straight weeks we have seen an increase in rates. I've got a link below to the average 30-year fixed according to Freddie Mac. If you've heard these terms of Fannie Mae, Freddie Mac puts out a great survey of the average 30-year fixed that is delivered to them from week to week. So check out that link below. While you're down there, hit that like button, hit that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. Now, interest rates, you're going to see down there on that Freddie Mac link, 6.96 is the average 30-year fixed. It is now mid-August. Our high last October was 7.08. That was the high for a decade plus. So we are very, very close to that. Now, why is it happening? I probably don't have enough time in this video to go through that, but I'll try to link to a past video talking a little about inflation, what the Fed is doing to try to give you a sense of that. But today we're going to talk a little bit more about what is actually going on in the real estate market on top of the interest rate market. So let me give you a few quick little stats here. This is coming from end of June, waiting for the July numbers to be released, but likely we're going to see a lot of the same. Inventory is still extremely low. 1.52 million homes for sale at the end of June out there. That is extremely low. So that is a very short amount of supply. Let me give you a little tidbit here, or a little extra number here. There is 1.6 million at the end of 2022 licensed realtors, and that is a different designation than just a real estate agent. But there's 1.52 million homes for sale and 1.6 licensed realtors out there in the United States. So that ought to tell you something in regards to inventory and what real estate in general has been experiencing with these low housing numbers. Now, you might be asking yourself, well, hey, we're pretty short in inventory, pretty hot market last year. We're down 12% year over year, so that's pretty significant. I'll give you, I am here in the Chicagoland area, North Shore, northern suburbs of Chicago. Our market specifically is down 25% on homes sold year over year. So absolutely positively, we're feeling that low inventory number here in the North Shore of Chicago. But overall in the United States, you're likely all feeling some sort of, hey, we are definitely down in terms of inventory, again, 12% year over year. This was one of the numbers that was interesting to me as well. Newly listed homes, 590,000 newly listed homes at the end of June. That is a 27% decrease year over year. So a lot of times summertime, especially getting back to school, meaning like August here, but getting into summer, people are normally have kind of got that house shopping, going, or they're going to kind of put it off till after the summer, right? So it just kind of depends. I see that in my market individually is, once school starts and they're into the right school district, they had the address, then maybe they might do something in fall, but they likely look a lot of times in spring. Now, again, my market is a Midwest market where we can get a bunch of snow or a little bit of snow, but we're not warm all year, that's for sure. So next kind of, this probably goes without saying if you're out there in the market right now, but the average list to sale price is at 100%, 100.3 to be exact. So that means if the home is for sale for $300,000, basically it's going for $300,000. Roughly 30 to 40% of homes are going for over ask. There are still a lot of sellers that are going out there trying to push that value up and up and up, and then they're actually coming down in price. And that is one of the reasons you should be working with an exceptional realtor or real estate agent to be selling your home, because again, just because it's super low inventory and it could likely sell quick, you could be leaving money on the table if you don't have somebody experienced within your local kind of municipality or market. So with that said, North Shore, kind of comparing this as well, we were at 100.4%, so right at that same number in terms of list to sale price. So what I'm seeing in the mortgage world on my side of things from buyers that I'm talking to every day is, we're continuing to see, hey, if we are looking at a $500,000 home, likely we need to pre-approve you for a little bit more. So kind of tip number one in terms of what's going on in this real estate market is that you need to be looking at the monthly payment. You need to be looking at a higher interest rate than what that monthly budget might be, or a higher interest rate to budget of what you want that monthly payment to be. So if you're looking and saying, hey, I'm budgeting at, say, 7%, I would suggest you budget at 7.5%. Give yourself a little wiggle room because, again, we've had a lot of volatility in this market and we're continuing to see rates rise. Now, everything that I'm seeing is still showing or projecting rates lower because we'll get a handle on this inflation. We'll see it lower into 2024 and 2025. But here's where we're at today. Lastly, I'm going to leave you with this because this seems to be almost a daily occurrence, but probably every other day. It's like, well, I'm just not sure if I want to buy now. I might wait around. And again, with super low inventory right now, we are seeing, still, I don't want to say a balanced market because it still is absolutely in favor of the seller, but it's not crazy unbalanced. Low inventory, but less buyers because of higher interest rates. My anticipation for 24 and 25 will put a smile on my face because not only do I believe interest rates to be lower and we'll likely have some refinances, I think we're going to get a lot of new buyers out there, a lot of new sellers. We're going to start to solve some of these inventory issues. But as we put, for every 5 new buyers, we're only going to get 2 or 3 more homes. Millennials as a whole, they're only about 50% ownership rate. So if you're a millennial out there, about 50% of millennials own a home. So there's a big number that could be getting into the housing market here if we see interest rates go down. So I can hypothesize and project that we're going to likely see a much stronger real estate market in 24 and 25 than maybe we had previously expected. So I love this market right now because people that want to go out and get a home can, because I think there's going to be a lot more competition for it later, and it's even pretty tough right now. So I'd love to hear from you. What do you think? What do you think of this current market? Are you in the market? Are you watching it? Would love to hear your comments below. Thank you so much for tuning in. My name is Ryan Skaggs. This is the Mortgage Minute, and if you made it this far, click that subscribe button. I'd be forever grateful. Stay safe, and we'll see each other again very, very soon.